For TraderInsight.com, I'm Adrian Manns, and it's time for your daily dose of the doctor. Well, I got an email from one of our trial members asking how do you handle all these trades when things trigger all around the same time of the day, mostly in the morning. And I want to go over the core section of the trading plan. We did have a bunch of stuff triggered this morning and show you how these can be handled in a very efficient manner and how it's not really as overwhelming as some might think it is. So trading is all about being prepared, and the first thing that I do to prepare for the trading day is I make sure all my charts are marked up for the following morning. So let's take a look at the plan as we had it. I'm going to go over the core portion of the trading plan and then have a look at how they worked out over the course of the first few hours of trading. So here's Ashland. We can see on the plan ASH, double header short side setup. 114.52 is the short sale entry trigger. 115.05 is the protective stop loss on the trade. 114.19 is 50% of the distance to the target, and 113.85 is the target. So in this case, once the market opens, there's a couple things that we can do to either trade this manually or fully automate the position handling once things get going. So let's first look at how I set up my charts. I put these lines on my charts every day so that I can just look over and see what's about to trigger, where it is in relationship to the 10 cent to the target mark, where it is in relation to the 50% to target mark, and where it is in relation to the entry. And of course, the way that I then can handle this is as things come up on these lines, I'm sitting in front of my computer and I can just put these orders in manually, and it's really not that big a deal to handle three things. In the case of Ashland, right, we've got the entry right here, 114.52. When it gets down to 50% of the distance to the profit target, in real tick, these lines become active trading lines, and I can just take this 115.05 stop and drop it down on top of 114.52, and now my stop loss has been changed to 114.52. It's a trailing stop. Once it gets down to 113.95, I do the same thing. I just grab that line, and this time I pull it down to 114.19, and that gives me a trailing stop at the 50% to target level. And then once the order hits 113.85, of course, I'm taken out of the position. So this is where I'm going to focus today, squarely on these manual order entries. Tomorrow, we'll go through and set up the conditional order entries, which are automated entries, and then the next day we'll do bracket orders. So by the end of the week, you'll have a good grip on the different ways to set up these order types. Next on the trading plan, we have BAH. That's a fastball setup. Our entry was 36.11. Our stop, 36.57. 50% to the target, 35.80, and the target, 35.50. This one never got down anywhere near our entry line this morning, so no trade on BAH. It did, however, get up to the central pivot and gave us an entry opportunity there. So if you want to go back and review some of the videos on how to take support and resistance entries, how to work with those pivot lines, we've got tons of material at TraderInsight.com that you can look at and see exactly how you could have capitalized on this bump down through this pivot line from above and the move back down into support at $36.50. But that's a discretionary trade, and what I want to focus on today are these discipline setups. So the next one on our list, GRA. This is an infield fly, short side setup, 68.77 entry, 69.26 stop. 68.45 is 50% of the distance to the target, and 68.12 is the target. Looking at the intraday chart of Grace, this one opens and trades up to the support and resistance level at 69.40. So, of course, again, you've got the opportunity for an early entry, and this one really would add to the bottom line. But let's say you're just waiting on the sidelines and you're looking for this 68.77 entry. You can see it happens just shortly after that ASH entry did. Gets you in 68.77, moves down to 50% of the distance to the target at $68.45. Move that stop down to break even, 68.77, right? Then when the stock gets down to 68.22, we're going to move the stop down to 68.45. And when it hits 68.12, it's going to take us out of the trade. Now, once it's out, it resets everything, right? So we get our stop back up to $68.22. And we've got another set of trade parameters on. And this time, we see that just a little while ago at 13:30, stock moved down through the 68.77 trigger line, and we are coming up on 50% of the distance of the target again. So second entries are handled just like first entries. Once it hits that 68.45 line, going to move that stop down to 69.22, and then manage the trade manually exactly the same way as we did the first time through. Finally, we've got Macy's. Now, Macy's triggered right off the opening bell. So if you had an order sitting there for this one, then you probably got filled. And if you did not have an order out there right off the open, then you probably missed it. That's just the way it goes. If you automate your orders on the open, you're going to wind up getting filled. And if you'd rather wait out the first 5 or 10 minutes, which is perfectly acceptable, then you're not going to get a part of that opening fill there. And the reason for that is that the open is a little bit volatile, and most of the time people are focused on either the Baltimore chop setups or some of the alternate entry opportunities, and they wind up missing their planned entries on some of their trades. But in any case, this one opened 40.27, would have got us in. A move down to the $40 mark was 50% of the distance to the target. It reversed, exited at break even, right? So this is a zero. So when you look at the trading results and see those zeros on the spreadsheets, this is what it's referring to. 50% of the target came back, got you out right where you got in. Then it reversed, came down. It got at least 8 cents above our entry price. That's my criteria. So as soon as this goes up and hits $40.35, the plan is reset. It came down. It hit the entry price. Never made it down to the $40 mark. Reversed and took us up to the stop loss at $40.71. And as of right now, it's just going to keep moving higher. So the protective stop worked. It got us out at the overhead resistance level. Could have set the stop a little shallower down in here. Obviously, this wound up being a very important level, but when I do set stops, I like to try to capture as much of the closing range as I possibly can. So in this case, $40.71 stopped us out. So there you have it. That's the entire core portion of the trading plan. It doesn't look as overwhelming when you consider this thing in proper order like that and just work through it, draw the lines, get everything in place ahead of time, plan the trade, trade the plan, and look for those early entry opportunities, and it's really not that difficult of a morning. So there you have it. If you have any other questions, shoot me an email, adrian@traderinsight.com. Hope you had a great trading day today and an even better one on deck for tomorrow. The best trader education anywhere, only from traderinsight.com.